This is a podcast from the Business Times.
Good evening. It's Thursday, July 16th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian shares fell today as a sell-off in semiconductors outweighed upbeat earnings from chipmaking giant TSMC. U.S. stocks advanced overnight, and Treasury yields eased after another tame U.S. inflation report reduced expectations of higher interest rates. Taiwan Semiconductor Manufacturing Company, or TSMC, the world's largest chipmaker and a key supplier of advanced AI chips, reported a record second quarter profit that surged 77%, comfortably beating market expectations. Despite the strong earnings, the results failed to lift sentiment across the region's semiconductor sector. TSMC shares closed 1.2% higher ahead of the announcement, but broader chip stocks remained under pressure. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1%, dragged lower by South Korea, where the KOSPI tumbled over 7% in the open, closing 6.37% lower, as the memory giant Samsung and SK Hynix slid 6.6% and 9% respectively. The KOSPI has fallen 27% lower from its June peak. Staying in South Korea, the country's central bank raised its benchmark interest rate to 2.75%, its first increase in 3.5 years. The widely expected move is aimed at supporting the won and keeping inflationary pressures in check. In other Asian markets, Japan's Nikkei fell 3%, while Hong Kong's Hang Seng Index resisted the broader sell-off, closing 1.34% higher. Meanwhile, oil prices retreated slightly as investors took some profits after the U.S. completed its latest round of strikes on Iran. The conflict in the Middle East has intensified in recent days, with Washington carrying out attacks on Iran and Tehran, responding by targeting U.S. bases in Kuwait and Jordan. Brent crude futures fell 0.54% lower to $84.49 per barrel, while the U.S. West Texas Intermediate was down 0.36% at $79.30, though remained up about 10% to 11% for the week. Moving to currencies, U.S. dollar stabilized today after hitting a one-month low, with subdued inflation data strengthening the case for the Federal Reserve to keep interest rates on hold. However, escalating tensions in the Middle East continued to weigh on the broader market outlook. The Japanese yen remained under pressure, trading at 162.10 per dollar, and not far from its 40-year low of 162.84, with investors cautious over the prospect of intervention. The pound sterling hovered around its two-month peak, buoyed by hopes that Britain's incoming Prime Minister, Andy Burnham, new finance minister pick, would be fiscally prudent. Turning back to equities, European shares opened on a softer note today, with the pan-European stock 600 slipping modestly into the red. France's CAC 40 was the region's weakest performer, declining 0.4%. On the other hand, U.S. futures pointed to a firmer open today, with Dow, S&P 500, and NASDAQ 100 futures all moving up 0.1%. That's it for today. For more business news and market updates, visit bt.sg and Lens on Daily for the latest, tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.